Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. After having a great year up until the end of the second quarter, General Motors is really having a tough third quarter and into the fourth quarter. The news coming out of Detroit has not been positive, whether it's from the UAW strike or delays in their EV manufacturing. So I want to go through some of the recent news and how to think about this as an investor. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And I want to thank this video's sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And I want to start with the biggest story that is happening with General Motors. That's the strike. The current UAW strike has gone on for over a month now. We have not seen this expand significantly for GM, but it has expanded to other plants that weren't initially impacted at Ford. And it seems like the union is really taking a hard stance against these companies. Now, I did a video on this before the strike started, and I said that the strike might last a while. I would be prepared for a 3 to 4 month strike. And one of the reasons a company like GM can handle that was they had about 3 months worth of inventory, both at the company and then at dealers. So there was enough vehicles in the system to be able to get those out to customers. Now, you don't want to have a strike go for an extended period. That's sort of the buffer that GM had in place. We also know that GM has increased their offers, now not offering that 40+% raise that the UAW wants over the next 4 years, but has gotten about halfway there. Again, as I covered earlier, the sticking point is probably going to be those pensions or 401k payments. Companies like GM just can't go back to a world where there's defined benefits, where they're taking on the liability of retirement for workers. So that's something that the UAW has asked for, but will probably be off the table for GM. So we'll see how this plays out, but I wouldn't really be worried about this as an investor for at least another month. What has become a little bit more concerning is the dynamics that's going on in the auto industry that are starting to impact General Motors. They did delay their investor day. That's partly because of the UAW deal not getting done. They probably don't want to have that investor day in mid-November without any sort of deal completed, but they have also announced the delay of some electric vehicle production. So as they're making those changes, that could be something they're not ready to detail for investors. But I want to go through what that delay was and how to think about this, because I think, again, there's a lot of moving parts, especially as electric vehicles become a bigger piece of the pie, but maybe not as big as people think. I'm just going to highlight some reporting from CNBC here to start. Said that GM is delaying their all-electric truck production at a new Michigan plant, the Orion plant, until 2025. They are actually producing electric trucks, but that is at a different plant. So this is something that's going to be just delayed an extra year into 2025. The AP actually went so far to say that they were delaying production in part because US EV demand is slowing. Now, this isn't necessarily the fact that EV demand overall is slowing, but the specific vehicles that General Motors was going to make may be seeing a decline in demand. The way that you can see that is particularly in Rivian's result. Rivian is really the one company that has moved into trucks and SUVs. Those are the kind of vehicles that General Motors would like to make electric vehicles, with their Silverado and Sierra trucks being the first two to hit the market that I think they had really high hopes for. But you see demand for the R1T truck being, I think, significantly lower than a lot of people thought. You can now get an R1T truck within a couple of weeks. So that backlog that they had that was supposed to be years long is just gone at Rivian. The other thing worth noting is that Tesla actually announced that they were pushing back their expansion into Mexico, said that basically they're not going to invest in that asset until it really makes sense financially, when they see the demand. So are we seeing demand for electric vehicles come down? They also talked about how difficult it's going to be ramping the Cybertruck and seem to really temper expectations for the Cybertruck. So the overall takeaway, even from the leader in the EV industry, Tesla, is that they're not necessarily seeing the demand and the growth in electric vehicles that you would have thought in the past. That really puts a question into how much GM is going to invest in their vision to make all of their vehicles electric by 2035. That was really the transition that they were starting to go through right now. And it seems like even Tesla is kind of pouring cold water on that, despite the fact that electric vehicles are 100% of their business. So there just might not be as much growth there as a lot of investors thought in the past. Now, with that said, General Motors may actually benefit because they are one of the leaders in traditional vehicles, and electric vehicles were not a profitable business for them. So they can sort of grow this business and rethink the way that they're building electric vehicles and manufacturing them, while some of these other companies are going to struggle just to get their plants off the ground. Maybe in the future, that's even a buying opportunity for a company like General Motors who can scoop up one of these manufacturers on the cheap if they run into financial troubles. At the same time, we're seeing the F 150, which is made by Ford, not have the kind of demand that they expected. They've actually shut down some of their production. So they're not selling nearly as many electric vehicles as they thought. So is electric vehicle demand overall going up? Yes. But customers are not demanding electric trucks in the way that you might think if you're a company like General Motors. So why not push off some of that production? The other thing that they talked about is making some engineering changes. We don't know exactly what those changes are, but on the last conference call, Mary Barra did talk about making some changes that would reduce their capital spending and actually reduce the production cost of vehicles in the future. So if they're reconfiguring or redesigning their production equipment, that's something that could justify a delay of about a year into 2025. So I think the clear news here is that we still have a huge uncertainty with the UAW, and GM is actually pushing back their aspirations for getting into electric vehicles. Now, the good news is that the conventional vehicles, the internal combustion engine vehicles, have been extremely profitable for General Motors and automakers in general over the last couple of years. And it looks like that's probably going to continue. We're seeing a vast majority of the investment in new vehicles go into those electric vehicles. And that means there's not as much investment going into traditional vehicles. So this has become a cash cow business. And that's just the reality of auto manufacturing right now. But if you're a GM shareholder, that's actually good news. But that's also a reason that you want to get workers back to work, making those trucks and SUVs that are so profitable. So a lot of moving parts here, but going into earnings, the things that I'm looking for is, do we get an update on the UAW negotiations? Is there some sort of update on the cost and investment they're going to make into electric vehicles? They have been bringing down the estimated investment that it takes to make that transition to electric vehicles over the last couple of years. And then what is cash flow going to look like given this work stoppage and the impact of electric vehicles? Because I think it's possible that delaying EV production could actually increase GM's cash flow. That's counterintuitive, but a lot of these companies are still losing money on electric vehicles. And if we don't know if demand is there yet, why not push that off and make the vehicles that are making the most money right now? So that's what I'm going to be looking at in the earnings report. I also want an update on Cruise, which is a business that I've covered a lot here on this channel. I think that's ultimately the biggest upside for General Motors as a stock and is the main reason that I own shares. But the upside there is going to be likely years away. So I will be back next week. Earnings are next Tuesday, October 24th. So check back here for my reactions to General Motors earnings report. There's going to be a lot to cover and a lot of information that comes out of the conference call. In the meantime, let me know what you think about GM stock, where they're headed in the future. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.